Guys, welcome back to the channel, welcome back to a new video, and today we are going to talk about only Bitcoin because right now a lot of people are screaming for 10, 12k, a lot of people saying the bottom is in, we are going higher, and I think we'll know soon enough in approximately 6 weeks. And during the weekend I always like to kind of step back, look back at the markets, zoom out a little bit and make a plan for the weeks to come. Where are we exactly and what can we do? Well, in this video we are going to look at what we can expect for Bitcoin in next, let's say approximately 4 to 6 weeks from now. And we're doing that by zooming out and looking at data. And here we have BTC USD on the daily, and we had this purple line which had a touch point here in the ultimate high. Then we had some touch points here at approximately 47, 48k. And then went down, and if I now zoom in, then actually we have broken out of this pattern and even retested it. As you can see here, this is again on the daily, and then looking back at it you'd say, oh my god, it was actually so beautiful that we exactly had a touch point here. We had a breakout, no volume though, we went lower, and then with a dump this week on the CPI data exactly until the support line. So first was resistance, flipped out support, and then you would say, okay, it's confirmed, we're going higher. I'm also really just using this as a support and resistance line, no targets or anything, but this is actually very interesting data to see. Okay, I'm right away going to zoom out because there's a few things that I want to show you. Again, a lot of people are screaming we first need to go down further to 12 or 14k. That will be approximately then 80%, so everything below 14k is more than 80% drawdown. And a lot of people saying, well, we should be there soon if we're just only looking at the cycles. This line right here, the blue line, is on the 10th of November 2021, and that was the ultimate top for Bitcoin. And since every cycle is approximately 1 year, that will mean that in the next 2, 3, 4 weeks we will most likely hit a bottom if we haven't reached the bottom yet. So I am really looking out for that date. There's a few scenarios that I'm keeping in mind when we're talking about a bottom, and I already said to you many times before, I really believe that the bottom is not in. Because I believe, or I start to believe more and more in these cycles, but also because just wicking down to 17,600 and then going higher from there, say, well, thank God it's over, let's go further. I do not believe that is from a technical chart perspective a healthy fundament to build on it to then go higher. So you want to take out liquidity at certain spots, trap traders, go higher, go lower, fake outs, breakouts, to really shake most of the people out. Because like I always said, the market is designed to take the most amount of money from the most amount of people, most amount of time. So that's important. So how could a bottom look like? Well, like I said, let's say, I mean, I could always be wrong, but let's say it is not in yet. Then I'm looking at a few scenarios. We could just have a dump down, but here in the past we also had a very nice, interesting pattern. And again, this is on the daily where we dump down, that is a low, and then later on we dump down again. This low is lower than this low, so taking out the liquidity, and then by the first hit or bump, then we are going higher. That actually could be a very valid scenario. And the same we saw also a few weeks later, exactly the same, big dump, sideways, going higher, dump again. This low is slightly lower than this low, again taking that liquidity up, sideways, third touch, and then going higher. So that actually would be a very nice valid scenario. Another one that we could entertain is that if we look to the left, and we had the top here in 2017 and then the drop in 2018, is that you're actually just constantly making lower highs, lower highs, lower highs, lower highs, and eventually have a drop down. So from the current price, and there's approximately 20,000, then you should say, okay, you need to have another drop of, let's say, 30, 40, 50%. That could make sense. Because also if you look at this, like the first few days, actually we dropped approximately 30-40%, but again that was then from 6,500 to 3,500, but then out at 3,500 really had that I think approximately 85% retracement. What could be something that could trigger. To be honest, with having the date in mind of 10th of November, saying, okay, if we form these cycles, then that should be approximately the date where we bottom out. I am staying very, very cautious. This is a nice article that I found. It said Jamie Dimon expects another surprise. Right now, I'm also expecting that anything could be a surprise. It could be the bond market in the UK. It could be Russia trying to use nuclear weapons. It could be, I don't know, another COVID or whatever. There is maybe just an event that you just don't know, don't see, a black swan event that will pull us further down. Bitcoin is also very much related to the S&P 500, and if the S&P 500 goes down, then Bitcoin also goes down. And at the same time, when the dollar index is rallying, then you see the S&P 500 going down and Bitcoin as well, and the dollar index goes up. I just draw a very simple comparison, and that is the Corona dump, where we dumped down approximately 35%. And I remember this very clearly because a lot of days the stops were triggered on the exchange, meaning that you could not trade anymore for the rest of the day. And that was kind of security, because then emotions take over, and to then make sure there's not like a Black Monday kind of event where the stock markets just drop 20-30% in a day. They say, okay, if we hit more than 7% a day or 7.5%, then we have a trigger stop, and then they halt the trading for the rest of the day. So that was a pretty intense event. But from top to bottom, 35%. Currently, although it takes a long time already, since approximately the beginning of the year, to where we are right now, 10 months in, only quote-unquote 27%. So if we would also go further to, let's say, approximately 3,000, what I told you is a very important psychological number. Look at that, 37%, very close to this 35.5%. So if this drops further, for whatever reason, let's say it is, let's hope it will not be the case, but let's say a nuclear event, I really think that the markets will react to that, and you might see kind of a capitulation dump down and then higher up. If that something like that happen, then I think, of course, it will also trigger Bitcoin, and then you have this massive dump down. If I look at another data point, and that is just the monthly average return, then last month, although we're having a bear market, we only had a drawdown of 3.1%. And in the previous years, also even in bull markets, you can see in the 2 years prior, we had a drawdown of more than 7%. That's of course a little bit weird in a bull market that the worst month of the year actually then performs now worse in this, better in this bear market. But also on the other hand, I mean, we also had months, October, for example, if I look at October 2011, there you had a drawdown of 36%. So of course this month could still be very, very horrible. If we look at last year, in the bull market, we had a minus of 7% in September, but then a plus of almost 40% in the month after in October. So just because we had a bad month doesn't mean that now we have a green month, because October used is pretty good. I mean, this could still give us a drawdown of, let's say, 20-30% and then go up in the last few days or something. So just this data alone, don't let it fool you. But of course, I just want to say that anything could happen, and just because we are kind of cracking the data, as in, hey, we have not reached that 7% prior what we had in all the years before, then therefore the market is very strong, then we're going up. We just could easily reverse that very easily, and now, like I said, have a very bad month for October. And then of course the average could still at the end be then approximately 80% drawdown from the top to the bottom for Bitcoin. Right now it is a little bit of a crucial time, and I know I hate to say that, because also so many YouTubers said it like, oh, it's gonna happen, we're gonna break, we're not gonna break. But if I just look at this from a chart perspective, then I would, from a technical chart perspective, then I would say it is almost too juicy not to go up and to trap traders into longs. Meaning that level that we already talked about now a couple of times, that is this top here at approximately 20,400-ish, and then maybe even the golden pocket approximately 21k. I think that if we reach the golden pocket, that will be amazing. But I think from that point on, also a lot of people will get very bullish again. That would be for me a very nice place if we have a big FU that the market says thank you very much, and now we are going lower from here. That actually would be very nice, because then I think maybe a lot of people, this is my FU by the way, a lot of people will maybe then are looking out for 22. Again, black swan event. Somehow I'm already looking at it or feeling it a little bit in my bones for the last few weeks. Then I feel like everything that's going on, I think there are still some surprises. This recession or this crisis for me feels very much the same as 2008, meaning that you have days on the markets where you suddenly have a big pump up, 3, 4, 5% for the S&P, and then the days after you then have a drawdown again, and that profit is completely being taken again. Exactly actually what you see here. So you have this intermediate bull runs in the S&P, and this, let me look, this day right here was 6%, unbelievable. The day here was 6%, this is 1.7. Eventually you're giving it all back again. So you see that traders then getting trapped thinking, oh, the bottom is in, the bottom is in. This is also a very nice trap, going lower, making a higher high, going lower, and then a green candle of 3.6%. People thinking, perfect, higher low, we are going higher now, and we have a relief value further to the upside, and then right away after the days after you're just getting smacked and you're still going lower. So you see that also the market here will then trap a lot of traders. That is just very, very tricky. Another scenario, except for that we might be going higher and then trap a lot of long traders and then going lower, is that we see something that we have maybe have some sideways action, and then just slowly have a very slow grind. And everyone is then constantly thinking, short traders are then constantly thinking, you know what, if it goes up a little bit, then I'll get into the short. Goes up a little bit, I'll get into the short. But the move to the upside is very minimal. Not enough for short traders to have the right confirmation to say we are going short and let's grab it. The market maker or the smart money will get in and just keep on pushing the price down, 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 down. And if it then goes up a little bit, long traders are thinking right away that is the bottom, they're getting in. And then it's not the bottom and they're getting in. And it's not the bottom and the beginning. So the short traders are not getting in because the bounce is not significant enough for them to have confirmations to get in. For example, to do something like this, take out this high, then going lower. And then for the long traders, they're thinking constantly that they have the bottom and again stopped out, stopped out, stopped out. And that is how the market could wreck a lot of people. We have seen the exact same actually also in this bear market, where you just saw actually a very slow grind at some points in the chart, not always, but at some points in the chart. This is, for example, a period we see slow grind, a bump, and a slow grind, and then we go up a little bit and think, that was the bottom, and slow grind, and you see just every day just a little bit. This was this day was 5%, but this was 1.6%, 1%. 1.5%, this was 5%, that was a lot. Then we think, hey, we had a relief, only 0.2% up. Then again 1.2%, 3%. So then there's not really a bounce, and then you're looking back and you're thinking, my God, where did this happen? And suddenly you're 20% down over a course of 2 weeks, and that is just that slow, painful grind that no one really gets on the bandwagon. There's one scenario that I'm very, very sure of, is that let's say we have a bottom, or we once dip lower between to the 17,600, and then say, okay, that was the bottom, is that it's not bottom 100k, yippee-ki-yay, that was it. The one who is telling you this, please write down the name, follow them, tag them, whatever. I cannot imagine that there is a scenario where that will happen. Why? Because markets move in cycles, and therefore we might have another drop, maybe not, but I think there will be a long sideways consolidation period for the year of 2023, and that is where people are just getting bored and just nothing is happening, and you just have a sideways market, and a lot of people then get out of the crypto space. They have their portfolio, it's down 70, 80, 90%, and it's just doing nothing anymore. and that is the moment that they say, you know what, whatever, I'm out, and they sell whatever they have for a few $100 and they never come back again until the year after. We have the halvening, and then we slowly see the price a few times coming up, and people say that was the bottom, we're going higher, then maybe we retested a few times again, and no one really still get enthusiastic, but it's slowly starting again. And then the year after, that is then slowly when you're really seeing that grind up again, projects coming up, and then you're going to new highs. In other words, I might be a little bit off with my timeline, but saying that the bottom is in and from here on we're going higher and the bull market is over, absolutely not. There is an accumulation phase, there is sideways markets. Markets that are going downwards still attract a lot of investors. Because you can short it. So if there's still a lot of volatility, it will be interesting for people to get into the market, and if you have those gurus that trying to lure you in because they're affiliate links, then that means that there is still a lot to do in the market. But if the market goes sideways and no one is interested anymore, and it is almost like a flat heartbeat, people thinking, why would I trade in crypto? Nothing is happening, it's dead. That is usually the accumulation phase. That is usually the time what is kind of the bottom of the market. And so far, I do not really see this as a bottom. I mean, a bottom doesn't mean that the price doesn't move at all, but still we have here moves up from what is this in 19k to 22k, and more than 20%. That's not an accumulation phase, that's not a bottom. Therefore, I'm saying whatever happens, if we break this or not and going lower again, or if we first go higher and then go lower, or there's suddenly a black swan event or whatever, I want to see a long period of time for weeks and months where just no one is interested anymore, and that is then usually accumulation phase. Like I said, I think it will be somewhere in 2024. That would also coincide with the idea that inflation is really peaking out. Then probably the unemployment rate will go up. We probably get a bit of a setback in the housing market because higher interest rates means it's more expensive to get a mortgage, therefore houses are coming down. And then probably the S&P 500 also somewhere found a bottom. And why I said this reminds me of 2008, not only because of the daily results in the market, but also because it's a much slower grind. And also here in 2008, I hope I can put it on here on the screen, is that we had this very slow grind, but actually it started off here already 2007 in October, and eventually the bottom was in all the way in 2009. So there you can see that this is a pretty long grind down, and after that we actually only went up. So it feels a bit like this, and that also coincides with the idea that the inflation scenario. You know what they say on Wall Street, inflation is like toothpaste. Once it's out of the tube, it's damn hard to get it back in, and that's exactly what is going on. So it will take months, maybe at least for another year. I always mentioned December 2023. That is when I really think that high inflation might be over and we are going lower. So maybe then the inflation is at 5 or 6%. With maybe some surprise in between, but that I think really is then kind of the target. So it will still take a long time, and then I think also crypto is quote unquote dead and sideways, and that actually would be then the most interesting time maybe to accumulate. Like I said, I still believe that there is a drop to go. To be honest, if we're gonna hit that 80% drawdown, then we are marking from 14k on and lower. So then 12k will be approximately 85% or something. But that of course then will be very interesting. I will trade it to the downside, and then let's see how long we can hold it. If not, if we are really just dumping down at that 17.6 and going higher, then I'm looking out for this scenario that I showed you earlier, where we have a drop, and then the second one is a little bit lower, and then the third one will come in a few weeks after. So drop, second one is a little bit lower, and this is the third one. So that is then the second scenario that I'm looking at. And that will most likely, I think, play out in the next 6 weeks. Also right now, if you just look at the candles, the market is extremely weak still. So this is really a bit of a short squeeze. And if we just see at the volume that's coming in, on the red selling candles, especially when you zoom in on the 4 hourlies and the hourlies, then you're really seeing that volume is spiking up, and that is just a very bearish sign. Also, except for this pump, then we just sometimes need a lot of green candles to go higher, and then we just need a few red candles to completely undo that, and that is just weakness in the market, weak hands being shaken out of the market and people are selling. So I am very cautious with opening longs, and if I am in a long, once it's in profit, right away I put stop loss there. If it goes down and it stops me out, so be it, but I will stay very cautious, because if you have a long position open and it is in profit, just imagine the scenario, it is in profit, and then suddenly overnight Russia uses a nuclear bomb, England, the bond market crashes. Also the FTSE is a very important market. Something happens, I don't know, in Singapore, Switzerland, New York, important financial centers in the world, and you get this dump during the Asian session, then you will be 100% liquidated, and you will lose everything, and you wake up in a massive dump of 20-30%. Because let's be honest, those major dumps that we have seen in the past, we have not seen them for a very long time already, and that also makes me a little bit scared that we might have one in the next couple weeks, just because it has been such a long time to liquidate and everyone, to get everyone out of the market, get the stops out, and then you have maybe a crash like here. This was 20% from top to bottom. Here was another day. This was also a big crash, 30%. So just imagine how much liquidity that is in the market, how many people will get liquidated, stops will be kicked out. So I'm just very afraid that if people are longing and you suddenly have that crash for whatever reason it might be, that is then kind of the quote-unquote black swan, and that is then the big dump, and then yeah, we can see what we're doing from there. But that is of course very scary. So if you put a gun against my head and say open up now a trade and hold it for the next couple weeks, I will be a little bit more comfortable with holding open a short than a long, just because the market is weak. I think we still have some time to go. The ferociousness of the candles, the news that is coming out, the S&P, the Fed, inflation, I think for the next 6 weeks I will be more comfortable holding open a short than a long, until we really can confirm that the bear markets are over, and that will still take some time, I think. Alright guys, I hope that you like these kinds of videos. If you do, then please do me a favor, like and subscribe. Click on the bell, click on all so you don't miss anything. And I see you guys very soon again in the next one. Thank you so much. Bye bye.